Well, good morning, everyone, and happy weekend. Hope you're having a great start to your Saturday so far. It's nice to be back in the office. Nice to be back, being able to look at things a lot more in depth and in more comfortable temperatures. If you guys notice, I don't have my coat on anymore here. We need to talk about a lot of things going on. We have liquidity on the rise. We have the potential of the gold rush we discussed a few months ago actually beginning. Want to talk about all that and more in this video. So if you guys are new or haven't already, show your support for the channel down below. But let's just dive right in because we have started off this weekend on a little bit of a red note. Yesterday, it actually been going pretty well. And then we kind of got a later day drop. We actually saw ADA drop all the way down to about 41.5 cents. We've set a slightly lower low today here, and we are back below this inner channel here. So understand that again, if we keep going on this weekend on a bit of a red note and we see more drops in the market and we see a little bit of that PTSD kick back in, we could be talking about ADA coming down here and potentially forming a double bottom somewhere around 39.40 cents. We have to watch stochastic RSI here because we're very close to a bearish flip on the daily. Understand on the weekly, we have flipped bullish, but we haven't really extended here yet. So again, this might be, if we do get a red move here, might be more of a shorter term red move before a correction back up. We have seen before this bearish cross take place on our way to the upside. Again, take a look back here in basically late June, early July of 2025. We saw this similar thing where we saw a little bit of a shakeout followed by a sea of green. And again, I'm not saying that's going to take place, but however, there are some things that are definitely worth noting here. In terms of BTC, we did again yesterday get a rejection off of that 20-day moving average. We talked about coming up there and trying to test that. So it looks like we got a little bit of a short-term rejection there. But what I will say here is, again, we're seeing some days of institutional accumulation. This isn't even the one I was going to look at because that's old data. Yesterday, we actually saw $71.37 million worth of BTC accumulated by institutional players. So it was actually the second largest day of the week. It was larger than obviously Wednesday, which is a great sign. On the Ethereum side, $76 million accumulated there. So as well, another great day. So you are seeing these large entities continue to accumulate. And it's not really surprising because what we're seeing is some of these major players in the space are really betting that the market is going to keep going up. In fact, Kathy Wood says ARK Investments' $1.5 million BTC target still remains unchanged as liquidity returns and market turns increasingly bullish. And I'll show you guys a few more things there in just a moment. But I want to talk about a few other things here. So Crypto Rover posted this morning, almost no Bitfinex shorts left. Smart money is long. And what you're seeing is a lot of the short positions that were super confident in the market are starting to wane just a little bit. There are some people that, again, are still thinking that the market's going to go a lot lower. We are getting into more spot accumulation taking place. In fact, what we have just seen is Coinbase BTC premiums flip green after a month of red. So again, people are shifting more towards spot buying and more away from leverage, which is what we want to see. We want to see the market obviously return back to more of an organic state than this basically over leveraged pile of junk that we've been dealing with for the past several months here. Now, something that we need to be aware of as well is that on Monday, which is December 1st, Jerome Powell is going to be delivering a speech. So I don't know what's going to be in this. Hopefully he plays things pretty close to the vest. We know the market can get a little wild when Powell speaks. So hopefully there's no bad news coming from there. But we need to talk about this gold rush. We had discussed a few, maybe a month or so ago. And it's kind of funny. A lot of people had given me kind of crap on that. And you know, these things, they take a while to play out, and we're starting to watch this play out. First of all, Circle minted another 500 million USDC yesterday. So the liquidity injections just continue to take place over and over and over again in the market, and people are ignoring it, and that's fine. This is again where we're seeing this slowly take place behind the scenes, and it's going to hit a lot of people when they're not really paying attention. One thing I wanted to talk about here as well is the gold is seeing some insane outflows right now. So for example, the Kobisi letter, never know if I'm pronouncing that right. The largest US gold ETF GLD recorded net outflows of 1.9 billion over the last 21 days ending Wednesday last week, the highest since May. This marked one of the largest withdrawals over the last 5 years. The move also represented the largest reversal in history from the plus 9 billion 21-day net flows seen in September. After a healthy technical correction, gold flows are showing signs of capitulation. We expect more inflows ahead. So we're gonna wait and see here what's going on with gold. That we obviously know that a lot of this was sparked. This big gold rally that we've been on was sparked based on uncertainty. All right. When in regards to trade deals with China, in regards to the government shutdown, a lot of these things cause this just major chase, if you will, this euphoric chase in terms of gold. And we reached obviously some record highs. And now, again, gold is in fact starting to wane here. If we look at the daily here, what does this look like? It looks like a chart that is slightly weakening, slightly lower highs. And again, we'll see if there is another gold push in the tank here. But you are starting to watch some people exit gold, and why that's so significant is when we see those gold exits taking place, it's usually a pushback towards more speculative assets, more like stocks or crypto. So that's what we might be what we might be starting to witness now. Now, again, you can't really put a direct correlation between the two, but I think it's very ironic that gold has been dropping and liquidity in the crypto market has in fact been rising. Those are two things that may be attributed to each other. But yeah, that's what I wanted to share with you guys. It seems like people are getting a little more confident in the crypto market. We did escape this extreme fear range. We're in the fearful range now, but we still have a lot of work to do. We still have a long way to go. And again, maybe this week brings us a little bit more excitement, but we'll just have to be patient, watch, wait, and see what happens. So have a great day. Share your love below. Let me know your thoughts. Catch you guys in the next one. Take care.